Now, we had the retail sales on Thursday, and so we saw the big rally with that because of the retail sales. The narrative is, oh, we're not going to have a recession now. That's the narrative. This is the same kind of narrative and talking points that was talked about just before the recession when we had the 2000 top and the bursting of the tech bubble. Same thing with the financial crisis. Again, the same kind of stuff. So it's going to happen now. I told you it was going to happen. Remember, we got that jobs report, and the 3-month moving average of the unemployment rate is now predicting we're going to have a recession. It hasn't been wrong since 1970. It's not going to be wrong. We're going to have propaganda by people telling us, oh no, there's not going to be, the same people that are, promoting this soft landing narrative nonsense from the Fed, and got the strongest number of retail sales. Retail sales jumped by 1% in July. Strongest number we've had in over 2 years. So the narrative is, low jobless claims, strong retail sales. No, we're not going into recession. Previously, the retail sales, it was a negative number, negative 0.2%. This one was 1%, was expected to be at 0.3%, and came in much better. So we have the rally. Oh, we're going to avoid recession. We're not going to avoid recession. Employment rate's predicting a recession. The inverted yield curve is predicting a recession. These are indicators that have a proven track record that have been consistently right. We continue to see on the financial channels all these experts telling us, oh no, we're going to have this soft landing out of the Fed. That is Kool-Aid that they spew out. The retail investors, they can sell into the rally, and the retail investors buy the dip. That's what it's all about. Just quickly, as we go into next week, we're going to get the FOMC meeting minutes from the last meeting there on Wednesday. Okay? And we'll get that during the market session. Next week is the Jackson Hole retreat. I'm going to be hearing from all kinds of Feds. Got a bunch of speeches lined up, and then the grand finale on Friday. The big kahuna himself, Jay Powell, will be speaking during the market session on Friday, 10 a.m. Eastern Time. There will be a speech at the Jackson Hole retreat. It was also likely related to not only hopes of dodging a recession, but we had options expiration on Friday. Tend to get exaggerated moves up or down on options expiration week. Now, options expiration completed on the 16th. We now have 4.5 weeks to September 18th. 1, 2, 3, 4, and then the half, and then we get September 18th. That I believe that the Fed is going to pivot, meaning that they're going to start cutting rates. Currently, the Fed has paused. The current target rate of the Fed funds rate is currently at 5.25 to 5.5. It is expected on Fed fund futures that the Fed will begin to cut September. I do think that is correct, as I've been saying. Now there's a 75% chance that will be the case, that they lower by 1/4 of a point. Then at the meeting after that in November, expected 62% chance that you'll get another cut. And at the December meeting, another cut. All 1/4 point cuts. That takes us into 2025. It's expected that there'll be more cuts. The Fed is going to cut for the wrong reason. The Fed is going to cut because recession is coming. So while everybody's celebrating, the herd is celebrating, oh, we're not going to have a recession. We're going to have a recession. It's going to happen. But the rate cut is expected to be on the 18th of September. Now, sometime before September 18th or just after September 18th, the S&P is probably going to go make a new high and fill the gap that we had back on July 16th. My guess is NASDAQ is likely already peaked, and it will go back and fill the gap made at that same time, but it will test the high and reach the 20,400 area. Historically, when we've had the Fed cut rates Had an initial bounce with it. 2007 and 2000, we had already seen the market begin to crash. It got a rebound with the rate cuts, and it went for about 2.5, 3 weeks or so, and then it resumed the crash. It already crashed right around 20%. So we had already ushered in the beginning of the bear market. That was the 2000 top. 2007, in 2000, when we got the rate cuts, the market had already peaked. In 2007, it was still in the topping process, and it rose with the cuts. In September, same date, September 18th of 2007, peaked about 2.5, 3 weeks later or so in early October to a slightly higher high than earlier in the year. 2000, we got a slightly lower high, and the process had already happened, and we began the sharp sell-off time the Fed cut rates. With the 2007 top, the market topped with the cuts, and it could very well be that way. We're either going to have the peak in, and I think NASDAQ probably already has. I don't think S&P's peaked yet, but we're either going to have the peak, the S&P, ahead of the Fed cutting rates or with the Fed cutting rates, one or the other. And if it is with, then we can go past the September 18th date to rally. But it is very, very possible that we see topping process completed with the Fed rate cuts. Again, the bear market will begin. We'll cut rates. This means recession is coming full steam ahead. Right now on Wall Street, celebrating we're not going to have a recession, which is a bunch of nonsense. Had the jobs report. It's predicting recession. Psalm rule was triggered. 3-month moving average of the jobs report is higher than the low over the last 12 months by 0.5%. Historically, every time that's happened, it's forecasted a recession. It has not been wrong since 1970. I think it's going to be wrong now. Inverted yield curve. When we get the uninversion of the yield curve, the inversion means that the 2-year is higher than the 10-year. When it uninverts, then recession is right at our door. That's what's going to happen. We saw the same thing happen. Maybe you weren't there, but I was. Same kind of nonsense saying we're not going to have a recession, and we still had a recession. But we're in a topping process right now. And again, that's why I believe S&P's probably going to go make a new high. NASDAQ's going to eventually go up and test the high. I think we'll usher in the bear market surrounding the Fed in the pivot. We've had the VIX move back to the 50 and the 200. The 50, notice this, the 50 is now above the 200 period moving average. There's a good chance it might stay there or turn back down below it and get right back above it at some point. Which again likely means that the bear market is coming. This is forming a bullish falling wedge, and as I told you, times the VIX will top before the S&P bottoms. Not necessarily every time, but it's still possible that we move to a new low to 200, but it's also just as possible now because of a powerful rally back up that we now get a higher low and then get another push on up into new highs. And I think that, again, S&P is going to move to new high. Eventually, I think as we move towards that Fed meeting, the FOMC meeting on September 18th, I think you're going to see the S&P moving into new highs and peaking shortly after that, or peaking ahead of the Fed. The Fed sometimes surrounding there, give or take. I think you're going to see the S&P make new highs and diverge with the NASDAQ, diverge with Bitcoin, already doing a larger divergence in Bitcoin and the S&P, which happens at market tops, both the S&P and for Bitcoin. Here, the spike on the VIX, we bottomed out that day. So again, it could be a higher low, and we just have them both topping and bottoming on the same day. Possible that we go back up and the VIX gets a lower high and the S&P still might move to a lower low. That is still possible. The odds start increasing that the low will hold and we get a higher low scenario. We've had a pretty powerful rally back up. Watching to see which way it plays out, but again, I do think we're going to go back and likely get some kind of test of this low, whether a higher low or a lower low. We'll see what happens. It could be either one. Odds are increasing now that you're going to get the higher low scenario because of a pretty powerful rally. Telling you, look, there are many cases in history where the VIX has peaked, VIX topped before the S&P bottomed. So be the case here. We'll see what happens. Have to be, but I'm just warning you, it's very common. But sometimes they do, top and bottom simultaneously. So again, the bullish falling wedge here, we have a rising wedge on the S&P 500. We're back testing. So again, I expect more work to be done to create a bottom, and then I think we're going to go make new highs, and then I think we're going to complete the topping process on the S&P 500 going into that Fed meeting. Like I said, a rally on past the Fed meeting, possibly by a few weeks, as we did in 2007. We peak ahead or with the Fed. Happen different ways. Eventually, I do expect that gap is going to be filled. Now, watching to see if we gain traction here off the 50 and the 200 as they've gotten the bullish golden cross. Spilling trouble for the stock market, but it's probably, like I said, S&P will probably still make a new high. Very well could stay that bullish cross. VIX recently has made predictions that have not happened previously. Prior to that going up, it made predictions that did happen. I told you when it goes parabolic, system becomes broken, parabolic move up and a parabolic move down. That's when that starts not being as accurate with the historic data. Nevertheless, we got a bullish falling wedge pushing into the 50 to 200 with the golden cross. We'll be watching to see if we get some kind of spike in volatility going forward. And again, did not have a pullback ahead of Jackson Hole. If we get it, what could cause it? Recession concerns, uncertainty. There's still a huge amount of uncertainty in the Middle East. Geopolitical issues often rattle the market. So it could be a number of things, a combination of things. But again, we'll be watching to see if we get some kind of sell-off to get a higher low or lower low. But I think, again, complete a bottoming process. And we've had, again, powerful moves, powerful move up on lighter volume, powerful move down on distribution volume, another powerful move back up. I mean, these powerful moves, back and forth. And again, all likely leading to a topping process. So again, if we see the losing streak here on the VIX break next week, with the catalyst may be that gives us the next sell-off or pullback or reversal, if we end up going and testing the 200, we'll be watching to see if we get another pump up here on the VIX. And again, we'll be looking to see if we get a lower high should this bullish falling wedge begin to play out. It may still be under construction, but we'll be watching. The S&P and NASDAQ have rallied up to their 200 period moving averages and overthrown them. NASDAQ's at the 50 period moving average in the daily time frame. They're back testing trend lines. Watching to see what happens with the VIX. I think the VIX has peaked for now, and if we do get another sell-off, I'll be looking for all likelihood a lower high. This is the largest peak that we've had on recession fear since the pandemic. And again, you can see I've marked all the other reasons for the spike in the VIX. And again, oftentimes you'll see a spike and then have another jump back up that makes a lower high. And we see that over and over again. I do think there's going to be more volatility, but then again, I do think that going into the FOMC meeting for September 18th, which is 4.5 weeks right now, I do think that we will rallying into that top ahead of it, with it, or shortly thereafter, like we did in 2007, a couple of weeks after. We'll see what happens. Well, could see a top on the S&P in September or in October. Now, we've had, again, powerful moves up and down, now back up, come right back up to horizontal resistance, getting the snapback rubber band rally. Well, the cloud turned back to bullish. Trend signals are not yet bullish here. Likely more work to be done. Again, either to test the 200 or to get a higher low, maybe back test the trend line. I'll show you that on the 60-minute chart. We're getting this gray shaded area right here in the daily time frame. And this is telling me something big is about to happen. Last time that happened, we had this fallout right here. Prior to that, we had this move up here with this one right here, and this one at marking this bottom, this move here. So it's telling me a big move up or a big move down is about to happen. If I go a little further back, you can see it over here. So we've had it at the top here, we've had it at the top here, we've had it at the continuation here, this consolidation, and we've had it at the bottom here. So which is this going to be? So again, we'll see what happens. Telling us something big's going to happen going into Jackson Hole, tensions in the Middle East, concerns about another virus now, whatever the case may be. But it's not telling me which way it's going to move, but it's telling me something big is getting ready to happen. A big directional move is getting ready to happen. That's what this gray shaded area is telling me. Now, either means we're going to have a test of this low, or we're going to try to just go parabolic. That's what this is telling us. One of those scenarios is going to play out. Now, the gray shaded area could still be under construction here, or it could be wrapping up. So again, just something to be aware of. Now, should we sell off with the resistance levels we're coming into on the S&P? Watching to see if a bullish buy signal develops. Over here, I had sell signals, and the cloud flipped after that. I've had the cloud flip, but I've had no bullish buy signals. I've had all these momentum signals telling me, hey, we're going to rally up here. Talking about rallying up into the moving averages, rallying up into the gap fills. Now we've overthrown the gap fill area here, and we've come back up to horizontal resistance on the S&P. Should we pull back and the VIX bullish falling wedge breakout, I'll be watching to see if we get signals like this that begin to develop higher low or maybe a lower low. Had them at the top over here, I had it at the bottom here, had it at the top here, had it nothing here. So watching to see if that develops. Maybe it just didn't form one this time, but there could still be one that ends up needing to be formed. If the S&P does end up selling off, I'll be watching to see if we start turning back down here with momentum. We are now in positive territory. What's interesting about the gray shaded area here is we also have it on the NASDAQ, saying something big is getting ready to happen on the NASDAQ. Same thing here. We've had this rally back up. This line represents the trend. This represents the swing move. And again, they're still bearish at this time. If we get above them, we start going parabolic here. Maybe they turn back to bullish. I think that the NASDAQ has peaked. I don't think it's going to move to a new high. I could be wrong about that, but I think that if we do pull back, eventually we will come back up and fill the gap higher there at 20,400 and really establish a lower high NASDAQ with momentum coming right up to the center line. So again, we'll see if it turns down. We'll see if we get some kind of pullback. Same thing with NASDAQ. I had these false signals, these false bullish signals given. It did not change. It was an unconfirmed signal. And down over here, I didn't get one. But as you can see, I got these momentum signals, and that eventually changed the cloud to bullish, to a bullish buy signal. But I didn't have what happened over here at this bottom, where I got the buy signal, which was confirmed. The topping signals back over here, which were confirmed. Maybe there's more work to be done here. We'll see what happens. Watching to see if we get a reaction or a turn off of this overhead resistance and these levels up here. But take a look at the gray shaded area again, telling us something big is getting ready to happen. Again, over here, it marked the peak. Over here, the continuation. Over here, the bottom. Back over here, the peak. So again, warning sign that we're about to get a big move up or a big move down. That's what this is telling us right now. NASDAQ daily chart here. By the way, before I leave this chart, again, big moves up, big moves up, big move down, big move up, and we're getting these exaggerated moves, really, really big moves. NASDAQ rallied right into the golden pocket. We're right there, just above the 61.8 Fibonacci. One thing to note is that even though we've had this big recovery after this big drop over here, we've had this big recovery back up, the background is still red. The trend is still bearish at this point. Again, there could be more work that needs to be done here, especially with the VIX forming a bullish falling wedge. Rally so far hasn't flipped these signals back to bullish. By the way, Bitcoin did the same thing. It flipped the cloud, but it didn't flip the other signals, and it pulled back off of the 50-period moving average, which we're testing right now on NASDAQ. S&P coming up and just overthrowing the trend line with our linear scaling, just coming up to it there with our log scaling. This is a linear chart right here. Interesting to note that at other significant bottoming points, the RSI is always pulled back. Here it was with a higher low. Here it was with a divergence. Here it was with a divergence in 2022. And with our log scaling, and I look at both linear and log. With our log scaling, we're just under the trend line. If you look at the trend line, this is comparing, connecting this point to this point. If we include it from these lows that actually broke that trend line, if we include it from that level, let me see if I get that straight there, then we're just slightly overthrowing it. But just coming up to these trend lines, they're the one here that was from this low, and overthrowing the one on the linear scaling. Log here. You're watching, does MACD pull back? Over here, we got the higher low. It did pull back, and it confirmed, it validated a higher low. Over here, it pulled back, and it confirmed a divergence. Do we get something like that? Should we get a pullback? We end up taking out this low, and again, we've had a pretty powerful rally, so maybe we don't. But if we do end up taking out this low, you've got your 200, and you've got horizontal support in this neighborhood. If we pull back, there's a trend line on the 60-minute chart, and I'll show you that. So the question right now is, as we hit this horizontal resistance level, the moving average is still in a bearish position. The 10 here, red, pointing up, but it's still below the 20 and the 50. The 20 is still below the 50. In a bearish alignment. So again, do we pull back and have them get a bullish cross, pause before going higher, maybe fill some of these gaps here, but come back, down to, maybe the 10-period moving average to the gap fills and maybe the Fibonacci retracement. So we'll be watching that. If we pause, we test the Fibonacci's and moving averages, you can get a higher low. If we get something more dramatic, I'd be watching the 200-period moving average and horizontal support. Now again, we're seeing momentum at extremes. Okay, we reached an extreme here, corrected sideways, and then had a gap and go. And again, remaining at extremes here as we hit this horizontal resistance level. Again, you got the possible inverse head and shoulders pattern here. Could be unbalanced if we come back to the Fibonacci's or get something even uglier. But you've got the gap fill down here. You've got the gap fill down here now. And if we come back to fill these gaps, you can come back towards the 61.8 Fibonacci of the advance. That would be for a higher low scenario. Our 50 is still below the 200, but it's closing in on it. And again, it could be we drop back below those moving averages. And again, the crisscrossing, the bearish cross, the bullish cross, the crisscrossing back and forth in this bottoming process. So I do think there'll be a test of this low. The question is it going to be a higher low now or a lower low? Powerful move back up. Let's start increasing that it's going to be higher low scenario. Now I told you as we were pushing into this trend line and the 200, they were directly above. Told you that again, we got the retail sales data that we could try to get something like this where we overthrow the 200-period moving average and overthrow that trend line. But that scenario, and I told you if we did, then you have this horizontal resistance directly overhead. I talked about the possibility of an inverse head and shoulders at that time. We've had gap and goes. We've had a couple of gap and goes. We've had a gap and go with the retail sales. We had a gap and go right here, and we had a gap and go right here. So 3 important gaps. If we do start pulling back, I'll be watching those 3 gaps very closely here on the 60-minute chart. Now, as we are at extremes right here, again, could give us a turn back over here when we were at the same level. We were at extremes and we turned down. And in 3 days, we had a very, very sharp decline. Same thing over here, these extremes and the diversions that did mark the top. Again, a sharp decline. To get that, I'll be watching these gap fill areas. I'll be watching on the daily time frame. I'll be watching the 10 and the 20 period moving average. We start seeing this potential rising wedge. Now, do go back and fill these gaps. The Fibonacci, the 61.8 Fibonacci. If we come back and fill this gap here, this gap here, this gap down here, you're right at your 50% retracement. If we go down further than that and move to try to fill this gap here or go to gap support near it, then you're moving closer to your 61.8 Fibonacci, assuming that we turn off of this level and that we begin to roll over with extreme momentum at extremes here. This is momentum in the 60-minute time frame. We've got the exact same thing going on with NASDAQ now. NASDAQ could backtest the broken trend line right here from the peak over here and this peak over here, we could back test that trend line, but you've got the same gaps going on here, the gap here, the gap down here, and the gap right here. It would actually take us down into this area. But again, same possibility. You've got the possible inverse head and shoulders, whether we get a shallow pullback and we don't have to fill all these gaps. We could do it at a later date. If we get a shallow pullback or something deeper, or try to take out this low over here. So we'll be watching very closely. But again, momentum at extremes for NASDAQ 60-minute chart after a 15.75% drop. Big rebound. And again, the last time we were at this level, right here, we're at this level, NASDAQ in 3 days dropped nearly 11% of that from that lower high that's set up. But in totality, 15.75%. But from that lower high, we dropped in 3 days. So again, do we get another kind of a dramatic move? What could do that? Well, tensions in the Middle East, for one. If we see a conflict breakout, that could rattle markets. Have Jackson Hole next week. We'll see what happens. NASDAQ at extremes with momentum as well. And again, at horizontal resistance, just like S&P 500. Fibonacci retracements. I'll try to show you in a moment. Quickly, here's NASDAQ. NASDAQ's just above the 61.8 Fibonacci here, and our 50-period moving average installing there at this horizontal resistance. Again, this was the neckline of our head and shoulders pattern that I told you was forming. And again, we formed that right shoulder, and then we moved down. We back tested it. Told you right here, this is where we are going to top at gap resistance, because that's where horizontal resistance was. And then we had that dramatic drop. Here we are back up at this level. And again, last time we were there, in 3 days, we dropped nearly 11%. So we'll be watching these other gaps. We're into the cloud. We're into our 61.8 Fibonacci of this decline. So we'll be watching to see, and the 50-period moving average. Again, the moving averages. Look at the moving averages on NASDAQ. Still in a bearish arrangement. The 10 is still below the 20. 10 and 20 is still below the 50. 10 is probably going to cross back above the 20 here in the next few days. Probably going to pull back towards those moving averages, or maybe go a little higher and pull back towards those moving averages. Eventually, make our way back up to fill these gaps up here, but we'll probably see a type of pullback for a higher low or a lower low if we get something really, really ugly. These wild swings in the market, wouldn't be surprised. Another one, we're getting pretty dramatic moves. NASDAQ at the 61.8 Fibonacci. S&P is at the 78.6 Fibonacci. By the way, as we push into these Fibonaccis and this horizontal resistance, we're getting on the 60-minute chart, just real fast, we're completing the 9 counts. I told you about that on Thursday. And again, going a little higher. But again, I'll be watching to see what becomes of these counts right here. This is NASDAQ, and again, it was a 913 that marked the peak over here. 9 over here. We'll see what becomes of this count right here if it stalls the advance. So do we go back and test the gap, try to fill the gaps, get a Fibonacci retracement, or a bigger sell-off to go back and test the lows and try to take them out? This is NASDAQ 60-minute chart. S&P completed a 9 count as well. And again, we went a little bit higher, so just something worth paying attention to. Multiple counts like what we're getting right now, oftentimes it marks price exhaustion. Multiple counts on the 60-minute chart going into the top there. So again, multiple counts often show price exhaustion. S&P 60-minute chart, something worth noting, no guarantee these counts play out immediately, but noting that as we hit horizontal resistance, we're getting price exhaustion. Now, NASDAQ's at the 61.8 Fibonacci, and the 50-period S&P's overthrown the 50, and we've come up to the 78.6 Fibonacci of this decline. We have a 6 of a 9 count. No guarantee that count completes. If we start to sell off and you start closing below the bar from 4 bars ago, it will get canceled out. But if we continue 3 more days above the bar from 4 bars ago, then it has a shot of playing out. It was a 9 count here. We went a little bit higher, and then we got the 10% drop. NASDAQ, it was nearly 15.75%. It was a 9 count on the very day I told you about it, that it marked the top for NASDAQ there on July 10th. Again, just coming up, overthrowing our 78.6 Fibonacci could be a place where we start seeing a retracement back down and either get a Fibonacci retracement of this advance or try to come back and move to take that level out. We'll see. Do we get a higher low, or do we try to move to take out the low from early August? Show you those Fibonacci's here on the S&P, and we saw it on the NASDAQ. And we've come up to these 200 period. Here's the NASDAQ. Again, 50 still below. Again, we'll probably try to see a bullish cross next week and eventually get the 10 period back above the 20 in the daily. But we formed a little divergence here, reaching extremes now at this horizontal resistance area and overthrowing it. So again, you've got an overthrow of the 200. You got an overthrow of this level. So we'll see if we begin to pull back and try to fill some of these gaps. So watch these gaps closely. If we do start to sell off, there is the possibility of a higher low before resuming the advance. And again, I eventually think NASDAQ's going to come up here and stall at this 20,400 area. And I think that's probably the peak. If I'm wrong about that, then you form a divergence in the weekly time frame. But often NASDAQ and S&P diverge from one another. So again, I'm not 100% sure it's going to play out that way. They both make a new high. I think S&P will. But NASDAQ's had a bigger sell-off, 15.75%. So I think it's going to make a lower high. But it could have more work to be done here and then go back up and hit that level and get, kind of an ABC type of a move here. If we've now started 1 and 2, and then the next move is, is going to be a 3, assuming that we can't make new highs. Rising wedges on both NASDAQ and S&P, overthrowing the 200. Again, we're likely going to pull back towards the 50, drop below it, and drop back towards those 10-period moving averages, fill the gaps, and try to hit a Fibonacci retracement or test this low, one or the other. RSI at extremes, MACD at extremes, and rolling over now. If something happens over the weekend with tensions in the Middle East, the market could always gap down and break down from these rising wedges immediately. We'll be watching to see what happens come Monday. Futures come Sunday. Should tensions rise, being stalled by negotiations right now regarding the hostages that Hamas is holding, and again, possible that we get further delay, but it is expected, the White House is saying something is possibly going to happen at any time unexpectedly. And we'll be watching these, and again, if we do see a gap lower, it could be something that we just start getting another big sharp move up, sharp move down, sharp move up. We're just seeing these really exaggerated moves in the market. Again, if NASDAQ pulls back, again, you got this trend line that we could find support at, or the cloud right here, the Fibonacci retracements. I don't have those marked right here. Directly overhead, we have this other gap fill right here at the 19,800 area. Again, we're at this resistance level that I've talked about. That was support, and now it's turned resistance for NASDAQ. So we'll see if we get a drop back down. Again, S&P's got the divergence that developed there on Friday here, again at this key resistance horizontal level, and overthrowing the MACD. We've got that still the 200 period, the MACD rolled over, and again also forming a divergence. So we could see this break down immediately if we start seeing it sell off sharply. We could see that happen. But you do have a rising wedge again on both NASDAQ and S&P 500. And you still have the bearish arrangement of the moving averages in the daily time frame, and still the 50 below the 200 here in the 60-minute time frame. But you do have the oscillator in positive territory, price to get above the 200. If we start dropping back below it, again, we'll be looking for a bottoming process to develop. The fact that the moving averages are still in a bearish arrangement likely means that we're still going to see some kind of sell-off for a higher low, possibly a lower low if the dramatic moves continue. And just look at 3 days, boom, and then this big rebound back up over 2 weeks. So I mean, it's just pretty. These moves are very, very exaggerated. We'll be watching to see what the next one looks like should we turn down off of this level. But again, I'll be watching if the bullish criteria forms here. Again, it could be we get a bullish cross as we pull back, drop below the moving averages, get a higher low, and then get back above them for a bottoming process. S&P 60-minute chart, the bullish criteria, you got to be above the 200. Right now we are. We could drop back below it here to fill these gaps and get a retracement. 50 above the 200, green line's 50, black line's at 200. They're still bearish. And then the oscillator in positive territory. That did happen this week. Bullish criteria. Able to stay above that 200 period moving average, and it's got to be rising. Right now it's dropping, and it's getting a lower high, and Price drops back below it on the S&P again, that could give time for the 50 to play catch up and get a bullish golden cross. Like I said, I think these gaps are going to, a couple of them are going to be filled, maybe all of them, but you've got these gaps here that we'll be watching on the S&P 500 60-minute chart. Again, NASDAQ 60-minute chart is above the 200, the 50 is still below it, just like on the S&P, but we did see on Friday oscillator move here into positive territory. So again, we'll be watching, do they start rolling over, get confirmation of higher lows, or something uglier? But again, this trend line is pretty important here. Again, we do start to reverse. I'll bring out the Fibonacci retracements. Did that on the S&P. I'll do it on the NASDAQ on Monday if we start to get a retracement. If we pull back, does the oscillator go back into negative territory? Does it stay positive? And we'll be watching. Is it a shallow pullback? Is it a deep pullback? Or is it something uglier? It attempts to take out the lows. We had the gaps over here over 3 days of dropping nearly 11% from the lower high that's set up. We had the gaps filled. Do we now see these gaps attempt to get filled over here? So we'll be watching all of that. Eventually, I think we go back up and fill this gap up here at the 20,400 area. But again, my guess is we're going to make a lower high. But so I think there's more work to be done, and then I think we're going to make a bigger move. And could it be we're getting an ABC structure that eventually takes us up like that, up into that area? I think that's a very strong possibility if this is a 5-leg push lower. Could be a 3-leg push higher for a wave 1 and 2. A 3-leg structure going into the Fed pivot, the September 18th meeting. Might be more work to be done here.